So my name is Matthew Sutton. I'm a partner at Burgess Hodgson, Chartered Accountants and Tax Advisors. We're based in Canterbury with clients throughout the southeast. I'm here this morning to give a few pointers on tax advice and the tax pitfalls for people, particularly in the residential property market. There's quite a lot of study, exams, and obviously we've got a lot of people that we work with that gives us the experience to give some of this advice. I can't make you qualified tax advisors within a 5-minute video clip, but hopefully what I can do is provide enough education around tax pitfalls that means that you can ask your advisors for precise advice surrounding your circumstances, because everyone's circumstances are different depending on where you live, country-wise, your income from other purposes, your age, and so there are many reasons why the precise tax for you may differ, and you do need to get full advice before you get it. But I will give you a few ideas, hopefully, about the things you ought to be looking out for, and the general tax ideas. So if you sell a property at the moment, since the last tax year, the annual allowance, so the amount of tax-free gain you can make, has dropped from about £12,000 to around £6,000, and as from next 6th April, the tax-free amount that you can sell is going to be down to £3,000. But of course, so that would suggest if you're going to make a £6,000 gain, make it this year rather than next year. But if your other income is going to be higher this year than next year, then it may be better for you to wait for a year to sell it. But so broadly, if you make a gain on a property, so you buy something for £100,000, you sell it for £200,000, you've made a gain of £100,000. There's a certain allowance that you can get that's tax-free, but that's only once a year on all the gains you make. And there are allowances for other costs that you have incurred. So you buy a property a residential property we're thinking about, you'll be, the cost of the main property will be in there, but then also any costs associated with it, so stamp duty, legal fees, costs with regard to improving the property. So as you go year by year, you may repair a lock or repaint a wall. Now that is just a repair. If you do something substantial to a property, so you put a conservatory on, or you make substantial improvements to the property, then the cost of those improvements will also reduce the gain you've made. Now the gain you make is then taxable, and the prevailing rate is, in broad terms, 28% for residential properties, but as I say, it does depend on your other levels of income. So the big bit this year, if you make a gain, you've got to put in a tax return within 60 days. If you're a non-resident, then you've got to put a tax return in anyway, but if you're a resident, you've got to put a tax return if you've got a gain and you've got tax to pay on that. If you make a loss, you want to make sure that's recorded, you know that loss, so you can use that loss against future gains if you make them. So commercial properties, the capital gains tax currently is 20% as opposed to a residential property is 28%. Obviously, that's obviously a big difference between the two, and that is as rates stand today. The Chancellor can call a budget at any stage, and he can change the rates at will. So you can only plan as best as you can with the information you have at hand. Right, so stamp duty is it's a difficult tax. It sounds simple because broadly pay none on the first bit, a couple of percent on the next bit, and so it goes on. Pay 3% extra if it's not your your main residence. But there are always loopholes. I think we've got the most complicated tax system in the world, near enough, and that's because people always try to find loopholes, and then the government tries to cover them up. So the stamp duty is slightly complicated. There are things that you can do. Yes, there's an extended zero rate for first-time buyers. If you're buying multiple properties, at once. There's something called multiple dwellings relief. You do need to be careful with linked transactions if you're buying effectively one property and trying to split it up. So that there's problems there with linked properties. And if you're buying more than 6 properties, I think it is, then you can actually move to a commercial rate of stamp duty. So yes, there are things you can do. There are reliefs available and different taxes on it, but there are. So there are, but they can be slightly specific. So the only general thing I would say is be careful. There are 7 major taxes in the UK. I'll go through them. You've got income tax, national insurance, capital gains tax, inheritance tax, VAT, stamp duty. I've missed one. Corporation tax. There we go. So 7 major taxes. Often people will have that conversation down the pub. I hear this is the easy way to save tax. Please be careful, because the likelihood of tripping up on another in trying to save one is huge. So be careful. Take advice. There's many pitfalls out there.